So let's talk about Steam Wars. Everybody's at home. Netflix looks to raise $1 billion coming off its big earnings. So earnings was coming out on Netflix last week, I believe, and I said just be careful with it. They beat earnings, but the forward guidance wasn't there, so the stock's price fell. Coming off its big earnings report last night, announces a debt offering of about $1 billion in euros. It's an interesting move considering the company hours ago reported $5.2 billion in the bank, along with an undrawn. They got a $750 million credit, just chilling. All right, speaking on the big earnings report, in a knee-jerk, sharp move higher following, that's evaporated. Shares are now down 1%, and that was on the 22nd pre-market, considering the near negative 50% run higher in the March low. Little profit taking might have been expected today. So, in looking at the stream wars, let's move over. Let's move over to the watch list. Go back to my watch list. What's in that field? We have Netflix, we have Apple, we have Disney. Those are the three that I have primarily. Netflix, Amazon. Where's Amazon? Do I have Amazon in here? Did I not put Amazon in here? Joey, why did you not let me put Amazon in here? Oi. All right, I'm going to put that in here real quick. I got to add that because that's part of my streaming, right?
Glenn didn't do it.
No, it's not Glenn. There it is. Whatever.
Glenn didn't do it right.
Apple and Disney. Let's go peep them out real quick. Netflix, the big boys. Everybody's chasing Netflix. Still overvalued. Amazon, way overvalued. Apple, I'm going to call that fairly valued. Price and value are real close to each other. And Disney overvalued. Let's look at their indicators. Relative value, upside potential on Netflix, still above 1. Amazon, below 1. Apple has good upside potential, relative value above 1, and Disney, not there. Relative safety, all of these stocks are safe. All of these stocks are safe because for the most part, they're making money. All right, all of these companies are safe. Disney's not only just in streaming, they've got their theme parks, which they just started opening up in China. So there's a lot going on with Disney besides just streaming, but it's part of my stream wars. And so all of them have the capability most likely to meet or exceed their earnings expectations and relative timing. All of these stocks are going up with the exception of Disney. RT tells me the short-term price trend. The one that's moving up the most is Amazon, but Netflix is right behind it. Then Netflix growing their earnings at 27% a year. Amazon 21%, Apple 14%, and Disney is growing theirs at a negative rate of negative 6% a year, and they all have positive earnings. The biggest one is Amazon. Well, it's the most expensive one on here, so it's got an earnings of $29. Keep in mind that our earnings is 12-month forecasted ahead. Let's go take a look at these stocks on the graph. These are our streaming stocks. Let's go see what's rock and rolling with them. Put them on a 3-month graph. As we do that, Netflix, rock and roll. Everybody's at home. I think a lot of people are coming back to Netflix as far as subscriptions. But even with that, found a level of a high sitting at about 449.52, pulling back. If I'm going to think about getting back into Netflix, let's see if it can break above that level of resistance. If I'm still currently sitting, holding Netflix, I'm okay. Leave it alone. Even with the pullback, this is why looking at a moving average or some semblance of a stop keeps you from being emotionally involved. Take the emotion out, have a stop in place. I do like that the stock's RT is above 1. The stock's in an uptrend. Volume, even with today's activity, is at or above the average volume. I like Netflix. I still like Netflix. Right now it's pulled back. If I'm not in it, I'm going to wait for it to break above the high. If I'm still currently in it, leave it alone. I should be happy. Amazon, again, another stock right at a high or a level of resistance sitting at about 24.60. Stock is clearly above the 20-day, RT above 1. Watch volume, though. As the stock's price is starting to level out, volume is pulling back. This is a sideways move. Be careful with Amazon. If you're still in it, leave it alone. If you're not, let's see if it can break above the high before you get into it. Apple, same kind of scenario. A little bit of a sideways move as the stock's volume is moving down. RT is still above 1, but pulling back. Apple's losing momentum as far as moving higher. If I own it, leave it alone. If I'm looking at this 20-day exponential moving average or the 20-day, it is 20-day exponential, Let's see if it breaks below that. Use that as a level of egress, but I have another level of support sitting at about 273.37. All right, a little bit of a wick today, a little bit of selling pressure on Apple today. And the last one is Disney. Notice that all three of them are a little bit in that sideways move, which is kind of interesting when people are at home subscribing to these. You know, my wife was doing Bible study by way of Zoom the other night, and I was in the bedroom looking at all of the Hulus and Netflixes, all of that stuff. You know, it's still hard for me to try to find something on TV. Do you experience that too, Joey? Joey doesn't, because he knows what he wants to look at. I don't always know what I want to look at. But I still find it hard with all of those streaming services. Unless I'm knee-deep in a series, it's hard to find always what you want to see. Very interesting. Same thing with cable. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.